Hey guys, this is Karthikeyan from Apex Finserv and I'm back with your daily dose of charts for tomorrow's trading session. Tomorrow is, not just tomorrow, in fact, over the past couple of weeks, the market has been in anticipation of the budget, so it's going to be slightly tricky. So I would advise you guys to reduce your risk just for one or two trading sessions so that you can come out of this without any real wound, if at all. Now, without wasting much time, moving on to the first equity trade that we have is a short plan on JSW Steel, where we are simply betting on the strong lower formation that it's been making. We're going to go for a short at 370, which is a previous resistance had turned into support on the upside, of course. Now it should act as resistance again. So we're going to go for a short at 370, stop loss at 375, ideal targets 1% on the downside. Moving on to the second one is Jubilant Food, where we're going to go for a long. Jubilant Food has been really volatile lately with movements in excess of 2 or 3% a day over the last couple of weeks or even months. So tomorrow we're going slightly conservative here, where we're going to go for a long at 2525 or 2525, which is previous demand zone. Previous in the sense that it goes back all the way to December, but it was an origin point of a really big impulsive advance. So we're going to go for a long there, stop loss at 2490, ideal targets 1% on the upside. Moving on to the third is Sibla, where once again we're going to go for a long ding on the historical support at 800, also a big psychological round number, stop loss at 790, ideal targets 1% on the upside. The fourth is an ICICI Bank, where we're going to go for a long as well at 525. It is a demand zone and close to a previous swing point as well. Also, in addition, it was range bound, then it started making small structural lower highs, but they have been invalidated now. So again, it might go back up. We're going to go for a long at 525, stop loss at 518, ideal targets 1% on the upside. Moving on to the last equity trade that we have is TCS, where we're going to go for a short at 3165 or 3165. Now TCS has seen a really big fall lately, and it has broken a really prominent demand zone as well. That should act as supply now, close to that price range, so that is where we're going to go for a short. Stop loss at 3200, ideal targets 1% on the downside. Now coming on to the indices, starting with Nifty first as usual. Now, the problem with Nifty is not really a problem, in the sense it depends on what kind of a trader you are. If you are an aggressive opportunist, then you will find trades anywhere and everywhere. But if you're somebody who likes to trade with sound logic and reasoning, trading in Nifty can be slightly tricky right now. Because as you can see, it's been on a relentless fall, slight pause, and it seems to be falling again. So right now, I have three levels for Nifty. One is 13500, which is going to act as a very strong support in the close times. Then I have 13650, 13700, which is more or less the correct price that Nifty should be at this point, and it is right there. On the resistance side, I have 13800. I would prefer to go long above 13800 and short under 13500 in terms of breakouts. However, I would also be willing to trade from 13700 to 800 on the upside and 700 to 500 on the downside. So I can trade either ways. When I talk about the option chain for Nifty, I have resistance immediate at 13700 with 437,000 added contracts. Significant at 13800 with a massive 1.2 million addition. On the support side, I have immediate 13600 with 702,000 added contracts. Significant at 13500 with 375,000 added contracts. When I talk about the PCR on Nifty, the PCR of volume, that comes out to be at 1.01, which does indicate a bearishness, but let's see how it goes. Moving on to the second index that we have is BANKNIFTY. Now, going just by the charts on BANKNIFTY, there are a lot of potential trades, even if you are using just the demand and supply zones, or even plain Fibonacci rather, but plain trend lines and support resistance levels. But for me, from my perspective, I would willing to go long on BNF anywhere near 3300 or 3350. I would be more than happy to go for shorts on BNF near 31,000. So either way, I have a trade on the upside as well as on the downside. However, the range is not as clearly defined on BANKNIFTY as it was on Nifty. When I talk about the option chain for Bank Nifty, I have resistance immediate at 3700 with 51,000 added contracts. Significant at 31,000 with 109,000 added contracts. On the support side, I have immediate at 3500 with 208,000 added contracts. Significant at 30,000 with 196,000 added contracts. The good thing, however, is the PCR that comes out to be at 0.88, which is moderately bearish and not excessively bearish as it was on Nifty. So this marks the end of today's video, guys, but as I said, the budget is about to come in, so be really careful, tread cautiously, and it's your hard-earned money. You can, well, to be honest, there are better ways to spend it rather than just lose it in the market because of your carelessness. So just for a couple of days, just scale down your position sizing, reduce your risk appetite, let the market return to normalcy, let the news subside before you go out all guns blazing. This is it from my side for tonight. I hope you have a wonderful, green and exciting trading session tomorrow. If you are liking the analysis, if you are liking the video, be sure to drop a like on the video itself, leave a nice comment and press that bell notification icon as well if you have not already. As always, I will share all the charts and the watch list and the option chain analysis on the Telegram channel at the rate Apex FinServe before the market opens tomorrow. So check us out there as well. Thank you so much for watching. Have a good night. Bye.